Hello traders out there in trader land. As we talked about last week, the bloodbath continues. D7 here with Grok Trade, and happy to go over technicals with you in the broad markets here as a whole. And if you look here, the S&P 500. We talked about breaking trend lines last week and said warning, 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 and then we just tried to show hope middle of the week, beginning of the week, and then we fell apart on Friday on massive volume. Check this out. Rising wedge, we break the trend lines on the rising wedge with a big nasty bearish divergence on the MACD centered oscillator, and we come crashing down. We're down below the 50-day moving average also. We're really extended to the downside, but that was extremely bearish volume on a Friday. Bad sell volume there. Thing I like to look at is the higher time frames. When I go over here to the weekly chart on the spiders, take a look. I was sounding the alarm that we broke a major trend line on the weekly chart on the S&P 500, and there we are. There we are. That's what we got the very next week. Like I said, we started off bullish, 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 and then we come crashing back down. Anytime you break trend lines, bad things happen. Anytime you break trend lines, bad things happen. You have to draw them correctly. There's 3 different trend lines you draw. We teach that in the 301 in our mentorship. If you haven't been through that, I highly recommend you at least look into it. But we teach how to draw those and when they get violated, when to look for trading opportunities that will make you money or save you money if you are long in the market, how to get out of the way of the train. What you don't want to do is give back 12 years worth of bullish profits because you were undereducated in the areas of technical analysis and trend lines and things such, as such. So what I also like to do when I'm here is look at all major indices. So I go to the diamonds. The diamonds we broke, and we're just dropping on big volumes. Bad. The Dow 30 dropping. The NASDAQ was okay until Friday. I thought we had a good chance of getting a bounce here on Friday. We did not get it in the Qs. So the Qs on Friday broke this trend line. That is problematic, and it happened on extremely large volume, especially on a Friday. But at the same time, it was quadruple witching. Of course, you're going to have large volume. Okay, it just comes with it. But it's just what we have found is anytime you have quadruple witching, for the most part, you'll get a bearish week thereafter, and we're setting up for that. We broke this trend line on the NAS or on the Qs. I'm going to go over here to the Qs on the weekly and show you the weekly chart. Remember how weekly I said we just got down below it, this trend line on the NASDAQ? I said, oh, I think we broke it. Sure enough, we did break it, and we are continuing down. Big nasty red candlestick, lower high, lower low, lower high, lower low. We are heading down. We have a tweezer top, very bearish. Tweezer top means equal tops. That's what we have there. Very, very bearish to have that. So again, this is a weekly chart. We broke that. This is putting in a high. Is this a long-term high? It could be. This could be a long-term high that we've already put into place. But if it's anything like the last 12 years, these are short-term highs. And because the QE keeps pumping, quantitative easing, the Feds keep pumping money into this markets. And sure enough, that's exactly what we saw last week. I'll talk about it here briefly momentarily. But let's go over here to small caps. This is the Russell's 2000, okay? If you look at the Russell's 2000 daily chart, we're in a big symmetrical triangle. We're caught up in the moving averages. We already had a sizable pullback. This would be a good time to see a bounce back higher, which it could do. It's hard to gamble on any sort of price action direction inside the apex of a symmetrical triangle. This is not the place to be trading within the midst of all of this. You will get churned and tore up. It's a bad vortex of nastiness right here, guys. So what I look for is a breakout above or a breakdown below before I start to really load up on any sort of position one way or the other. But a lot of times the small caps, these lower liquidity stocks can lead the markets one direction or the other. But if you look at this, look how we've been in a trading range between $208 to $234. So from 200 to 230, we've been in a trading range since for the year for the most part. All year long, we've been going sideways in the market, and this will make a move one direction or the other. And what I like to do is go to the higher time frames to see if we can get an idea of what's happening. Well, if you look on the weekly chart, we have this double top, see that? Double top. We come down, then we go into a bear, kind of a bear flag, but we pulled down this last week. Look at this. For the week, we almost broke this trend line. But just like this week, we rallied back. Do you see how we rallied back when we stopped at the trend line? We stopped at this trend line again. Will we rally back up? We need to stay bullish in the market. However, if next week we break down here, even small caps are breaking trend lines, and we are in a lot of trouble. This blue line is a big area of support. I'd like to see it remain as a big area of support. This trend line goes way back here, okay? This goes back 2014 to 2018. That could act as support where we're at right now. But we are teetering on thin ice there. If we show any weakness at all on the weekly chart, we are in trouble. This is a weekly chart on the Russells. The other thing, the month is still in play. So we are just now, I mean, we're in the middle of the month, but I want to look at something. Go to candlestick. We're basing here, but we have a trend line right there that if it gets support, if we break that support on the monthly chart on the small caps, the Russell's 2000, we are in a lot of trouble, So that's something that we're watching. The other thing I like to look at is financials. This is where I see the financials have been leading the markets all week long. So on the days that have been bearish, the things that have been doing the best happens to be the financials, the banks. So the only way they're doing good is if the feds are keeping them afloat. Anytime you have an M for murder right there, you see this big fat M? That's a great M, slightly higher, big time lower. Do you see this on the MACD? It's a bearish divergence. We should have seen a sizable drop. We see a little bit of a drop here on the daily chart on the financials. We are building kind of a sideways chop caught between the 20-day moving average and the 50-day moving average. We're caught between those two, but we're caught between them at the low of this leg, not at the high of the leg. So for example, we have a high leg here. If we got caught up here, that'd be X% more bullish. Instead, we go down and get caught up. That's X% more bearish, because once it dropped, the bulls weren't strong enough to yank it back higher. It failed to do that. So this is consolidating here, and I think we're going to get a violation of the 50-day moving average, and that could break lower. So the other thing I like to look at here is the weekly charts. On the weekly charts on the small caps, last week we broke that trend line, which was a major break. This week we had a sideways high but a lower low. It did not give us a lower high and a lower low. It gave us a lower low but an equal high, slightly higher high. That demonstrates what I have been seeing this week. We actually went higher than the previous week on financials when the rest of the markets were sizably lower all week. That shows QE trying to come to the rescue, trying to prop this higher. But I think the markets, anytime we're showing strength, we have institutions coming in and selling into that strength. So the markets go higher, institutions say, oh, thank you for giving me a few more bucks out of this. Let's sell now, lick our wounds. And you see price get driven lower because of institutional selling. So that's what we're looking at here. All right, so let's move on and let's go over here to the US dollar, which is very important to look at. Oh, first, before I do that, let's look at the financials monthly chart. Even though we're not even we're only halfway through. Look how we dropped, we rallied up. If we continue to drop the next 2 months, we'll have an M for murder at the top of a major run to the upside. Monster run to the upside, and then a double top. So if we start to drop this month and October, that will be we will have put in our highs this last month. Okay, that will be what will happen. We will see a sizable drop to the downside. So we will be keeping an eye on that. And if you don't want to miss out on this level of trading education, I've been doing this 23 years. You hit the subscribe button, hit that notification to get in if you like it. You'll miss out on more education and information like this if you don't hit the subscribe button. You need to do that if you want to make sure that you don't miss out. But anyway, I want to look at the US dollar. We'll start off with the daily. US dollar popped up, did that high base. Remember I said the high base is more bullish and bearish, and sure enough, Thursday we popped, Friday we popped higher. That's going higher, putting a lot of pressure on commodities such as crude, such as precious metals, gold and silver. It's hurt gold and silver badly, this bullish activity on the US dollar. What I want to look at is the weekly chart, and sure enough, as we expected, we bounced here, and I said look for more upside on the US dollar, and sure enough, we had a big move to the upside, just a big move to the upside on the US dollar on the weekly chart. It's going higher. Oh, you know what? For educational purposes only, you'll see here we had a falling wedge, breaks out, does a pullback, and now is heading higher. The falling wedge usually will put in the lows of a major trend. So that's why we look at rising wedges and falling wedges. Falling wedges put in lows, rising wedges will put in highs. That's why this last video, if you haven't watched the last video last week, I called all these rising wedges breaking down. That's the highs being put in at this moment. So if you, this is the weekly chart. It's popping higher, and it played havoc, guys, on silver. I would not want to be in silver right now. Look at this. If I go to daily chart on silver, Thursday and Friday was a bloodbath due to the US dollar on significant volume, guys. We have lower swing highs, lower swing lows. We're in a defined downtrend. You do not want to be holding gold or silver right now. It's just on a slope downward. If you go over here to the weekly chart, check this out. We broke a major trend line. Support broken. We're in a lot of trouble here if we stay below this trend line, which I think we're going to. The only way silver is going to heal itself is the weekly gets back above this trend line. If it doesn't do it immediately, just sit on your silver or get rid of it for the time being. It's just not a good place to be. The other thing I want to look at here is the monthly chart on silver. 3 months ago, we broke that, and I said, guys, we're in a lot of trouble here when you break these support levels, and this is what happens when you break this trend line. See this? It just gets slippery, dickory dock. You just head straight down the clock. That's what happens. That's what happens right there. So you be watching that stuff. Don't let it get by you. Don't let it get by you. So gold, same way. If you look at gold, this is the daily chart on gold. But the benefit it has is it stopped at support, major support. Like this, I have more hope for gold than I have in silver at this moment because we stopped right at a support line and it's wanting to go higher. People were buying up that that weakness down here. Let's see what the weekly shows. See, the problem is the weekly broke this trend line. Symmetrical triangle, we broke it. That's in a ton of trouble. We might get a small bounce on gold, but look for more downside. I would not in a million years want to be holding gold and silver right now because I do not see hope. But let me tell you what can happen. This is only the people who are in our advanced mentorship that get in on this, but it's called a death hook. What you can see here is a drop, a retracement, a healing, and a penetration of the apex to a major upside swing, which are very profitable, and there are there's a very high probable way of capturing those and making money off of them, death hooks. So anyway, that's gold. If you look at gold and go over here to the week, that was the weekly. The monthly has the biggest hope too. This is a bull flag. So the bull flag tells me we have a chance of going higher. And the thing I want to do there is do that. So we could get a breakout over the red line, and if we get a breakout over the red line, that would be a bull flag breakout to the upside. That could get really bullish, but we're making lower swing highs, lower swing lows. So with that, you have to remain either in cash or bearish in this environment until that breakout does commence, does happen. When that does, then you can reverse your position and go there. And let's take a look at VIX. The VIX daily chart popped up over it. Okay, so look at this. Last week we broke over it. That was bad news. And then Monday, Tuesday, Wednesday, Thursday, it was healing itself. It come back, but Friday says, no way, we're going back up. So I thought, oh, yes. So that was a jab. Things could get really bullish. If the VIX goes down, that means things are bullish. If the VIX goes higher, things are bearish. It's an inverse indicator. Look at it as fear. It's a measurement of fear. Friday had a lot of fear. We went higher. Friday we had a lot of fear, went higher. Same thing last Friday, a lot of fear, went higher. So we're over this trend line. But let's see at the higher time frame. The weekly says on fear. Last week we hit our head at it. This week we are now over it. Do you guys see this? That line is now over it. We broke over that resistance line. Not good. Not good. So fear, in other words, is in a symmetrical triangle on the weekly chart in the apex and is loading up to bust out in large part to the upside. That's what it's setting up to do. The Feds need to come in a big, big way. I just don't see a lot of institutional buyers, hedge fund people in my world. I don't see us looking for buying opportunities right now. We're looking for selling opportunities. So that's bad news for the markets when you have bigger pockets looking to sell. Bigger pockets. So Bitcoin people, Bitcoin, if you go over here to the daily chart, it's been under a lot of pressure, but it's a high base. Look for that to rally higher. If you look at the weekly on this, we're caught up in a big symmetrical triangle, but the thing that's really bullish here is for the week we have a higher low. So this I thought was going to go down this lower line. It was too bullish to do so. If we keep chopping around up here, look for this, the major breakout. And last time we were up in the 60, what did we get up? As high as 64,000 or so. You can see that right here. You got up to 64,000. And, you know, we'll blow past that. You know, I think our next one will be up in the 80,000s, 100,000s. That's coming next for Bitcoin. And if you don't have Bitcoin, I think it might be worth having some exposure to it. And the only problem I don't like is the monthly on Bitcoin is showing a topping formation. If we were to stop there, it'd be a drop, a rally higher. This would be a better short than long on the bigger time frame. So this thing could come back down before it's ready to rally back higher. So the monthly, the bigger time frame, I'm watching really closely because that's not my, you know, that could be really problematic for us. In other words, the weekly on Bitcoin will have to break down sizably for that to happen. Quick look here at Ethereum, which I hold a lot of. They look virtually the same except for the monthly. The monthly, we're not seeing the same level of pullback like we did on the Bitcoin. We're heading higher, but it's still looking toppy. The weekly, hit our head on the weekly. We pulled back. As long as we stay above these moving averages, that's really bullish on Ethereum. And so, you know, that's where I'm at on that. Quick look while I'm here on Apple. A lot of people like Apple. And very liquid, but it hit its head at this resistance point, and this resistance point isn't by accident. This is a trend line. We drew a trend line here to there. If you go to a line chart, there to there, do you see that? And then we missed hitting it here. Do you guys see this? First, I want to, this is a education. We hit, we did not hit. See that? Did not, and it already started to sell. So that red candlestick dropping got near the line. You can see it there. That was the area to sell into. Smart money sold that right there. Bam, short this all the way down. Looking awful bad. We have some support levels coming in. It's sitting at support levels. But if I look at this, and let's say if I go over here to the weekly on Apple, just take a quick look. Yeah, so the problem with the weekly is we have a lower high and a lower low, and we're below the 9 EMA. So this is, I would not want to be holding Apple right now at all. Apple, I would not. Quick look at Amazon. So this one went choppy. I like to clean these things up, but this triangle popped up and then dropped, but it was short-lived. Amazon kept churning higher, but this is if it were to get under this trend line, I would not want to be holding that. All right, so that's it. I'm heading to the Bucks game. I live in Tampa. I have an office downtown on the financial side of things. I can't talk about that business legally. So as far as you guys are concerned, I own a trading education company only. So I am going to the Bucks game today. Go Bucks! But because I'm a Colts fan, because I come from Indianapolis, you know, I love Peyton Manning, and our rival was Tom Brady. Tom Brady now is the Buccaneers, so it's a love-hate relationship I have with him, but now he's not with the Patriots. He's with the Buccaneers. I love the guy as a person. He's just an amazing individual. So I'm starting to have a love for Mr. Brady. You know, I'm still struggling with it if you can't tell. So looking at that. And last weekend, actually every Wednesday we take off for family time, and we went out and we did canoeing this last week out in the Bay Area. We saw manatee come up, and but we didn't see it. It came up for a breath. They're really loud. It sounds like a cow taking a breath in the water. They went under, and I couldn't find it again. So, but anyway, we're having fun down here in the Florida region. We're enjoying it. I'll be really enjoying it when the weather starts to cool down a bit. So they're promising me in October all the snowbirds come back because the temperatures are more bearable. So anyway, we're enjoying it, and something that we do on the side. We're traders first. We do it on the side. You should be. Everybody should be mentored. Don't be a trader without having somebody at your side. So what we do is we mentor people just 3 days out of 30. 10% of our time we give back by mentoring, but we don't give back. There is a fee. Matter of fact, the fee is a fraction of all the big guys out there, and I did that on purpose because I don't think anybody should have to pay $25,000 for their trading education. It's ridiculous. And that's what the average person is paying out on the big firms. They bring you in on the free stuff, and then they sell you when you get there, $25,000 package. So you go up to 65, but the median range is 25. But anyway, that's stupid. Nobody should pay that. But we stay with you until you make all your tuition back with us. So we stay locked arm in arm with you until all your tuition is made back. And that's our promise to all of our students that come through. So anyway, I hope that's of help to you. Appreciate it. And I love your comments. As you can see, I respond to all of them, and I leave little hearts and stuff. I appreciate the comments. Let me know if you made it. But I'm really interested to know where you're listening from. Where are you located? What city and state, or you can just put state, or what country. Really interested in hearing where you guys are from. So please put that in the comments. I want to know. I told you where I'm from. I want to know where you're from. Take care, guys. We'll see you later. Bye. And